Hey, what's up, my friend? So, welcome back, right, to another week of our weekly market analysis, right? Today's video is basically, right, sharing with you a couple of losses that I had this week, right? And I would say there is a very powerful lesson, right, behind it because one of the trade that I took, right, it's something that I'm pretty sure it has happened to you before. You buy a breakout, the market reverse on you the next day, and you're wondering, should I exit the trade? Should I let it hit my stop loss, right? Or should I, reverse and, take the opposite direction? So I want to, analyze this particular scenario for you, right, in this week's market analysis because this is what happened to me, right? So all this and more in today's video. I'll see you there. Okay, so the first trade review that I want to do is on gold, right? So for those of you who watched last week's video, or maybe 2 weeks before, I said that I was looking for a breakout on gold because firstly, right, there was a volatility contraction, right? Notice over here, volatility has shrank over here in gold. And usually what happens is that when volatility shrinks, right, it tends to expand, right? So I am actually expecting, right, the volatility of gold to pick up. So my entry trigger came over here on the 4-hour time frame, over here. Okay, so I basically went long, right, when the market break and close above this area of resistance, right? I had my stops, I believe, somewhere over here, right, just a buffer away from this swing low. And then what happened shortly is that I pretty much got stopped out of this trade. Bam! Right, on Friday we had a massive, sell-off and I got stopped out of the trade. So this is a loss for me on gold. And I guess what I did learn about this is that, again, right, during the breakout, actually what you notice is that subsequent two candles, right, all this is based on hindsight. So it may look easy on hindsight, I should have done this, I should have done that, right? But I'm trying to, objectively share with you my own thought process, right? So that in future, if this particular scenario do play out again, right, I have more options on my plate. Because when I traded this particular breakout, the thought process I had at that point in time is to, have my stop loss down there and the market either goes in my favor or hit my stop loss, right? But when I look back at this trade, right, I noticed that I could have actually be more proactive on this setup, right? Because if you notice, right, what happened over here is that this is an area of resistance. Okay, the market broke out of it, and then it pretty much gave me a false break setup, right? For those of you who have been following me for a while now, you know that false break is basically where breakout traders get trapped. All right, so you can see that this market tried to rally higher and then it closed bearishly lower. So now breakout traders like me are trapped because the market has suddenly do a 180-degree reversal. So this, right, could have been a signal to me, right, to actually get out of the trade first, right, and take whatever small loss that I have at that point in time, or even go short, because this to me is a valid false break setup. Second candle, another form of price rejection, right? Notice the market rejected higher prices once, rejected it twice. So this over here, right, could have been ample warning for me, right, to actually get out of the trade, right, rather than letting it hit the full 1 hour stop loss. So clearly I didn't, right, because as I've said, I was actually, letting the market either move in my favor or hit my stop loss, right? So this to me, if I wasn't, right, in a long trade and I look at this chart, right, I could have just possibly went short based on this price action alone, right? And on top of it, right, you saw that earlier on the higher time frame, gold was in a volatility contraction, right? So you know that if the market does, break out in either direction, you can expect a huge explosive move, right? And this is pretty much what happened, right, on Friday, right? So anyway, I got stopped out of this trade, but I thought that this is a very valuable lesson to learn, right? In future, if you are trading breakouts, right, and if the market does this type of price action where it breaks out and then it reverses, what are you going to do? Are you going to, immediately take that small loss? Are you going to take that small loss and then reverse in the opposite trade direction? Right? So these are, additional layer of complexities, right, that as a price action trader you would have to think about, right? It's not just, memorizing 1, 2, 3 pattern and then, that's it, right? As the market unfolds itself, as the price action change, as the structure change, right, you have different trading options that would, be available to you. And to add another layer of thought for you is that imagine you went short, right? For example, you went long, okay, and then the market shows you, a false break setup, right, rejecting higher prices. So you exit the long trade and you went short. But imagine this. Imagine, right, this market, right, instead of heading down lower, what it does is that it continues to break out higher. So this means your original trade direction is now correct. So what are you going to do now? Are you going to reverse your trade direction this time around, right? In anticipation of higher prices, or are you just going to let this trade work out based on your short bias at this point in time? So you got to see, right, that the layer of complexity can add on one layer after another, and there is no right or wrong answer to it, right? I'm just helping you to think deeper about the price action of the markets, right, and how you can actually manage your options in real time. So these are all definitely scenarios that will play out again in the future, and I want to help you think deeper about it, right, not just spoon feed you blindly. Okay, so this is a gold trade, and I thought that definitely, right, a lot of valuable lessons to learn from it, and even I myself, right, I pretty much enjoyed this loss because I had something taken away from it. Okay, so moving on, right, another trade that I took another loss. All right, I'm not afraid to share it because if there's no loss, right, then something is wrong. Okay, so this is another trade I took, then pretty much it's a very straightforward setup, and I have no issue with this trade, right? Price basically broke below this area of support. It did a pullback, right? Relatively weak pullback, and then it break below this swing low. I went short, had my stop loss 1 ATR above this high somewhere here. The market pretty much reversed and took me out for a loss, right? So no issues with it, right? Pretty much followed my plan, and from the looks of it, right, it's the cost of doing business, and I am perfectly happy with this trade. At the same time, right, although I had 2 losses on this week itself, right, there are trades that are running, right, and I want to share is that when you are trying to ride trends, right, as a trend follower, right, the losses won't really impact you too much because you would have winners that are riding that will tend to offset certain losses that you might incur. For example, right, dollar African rand, not sure if I mentioned it, right, but basically, right, there was a valid breakout trade a few days back. So basically the market showed signs of bottoming pattern over here, right? You have this inverse head and shoulders pattern, right? Market broke out, retest previous resistance turn support, and then it went into a volatility contraction, right? Notice that the range got pretty tight, looking somewhat like an ascending triangle pattern. I went long when the market break over here, right? Break above this highs. I went long on this candle, and then stop loss again, right? Just somewhere over here, right? Below this swing low. And this market, right, is pretty well moving in my favor, and I just trailing my stop loss. So there are open profits on this, right, that kind of offset the earlier losses I had. Right, similar for the dollar against the Chinese yuan, another breakout trade that I took. Similar setup to the dollar against the African rand. All right, basically this area of resistance, right? Basically, just to show you a big picture perspective, right? This dollar against the Chinese yuan, it has been declining steadily for over the past 1 year or so. Okay, and what I kind of noticed is that this market, right, the decline has somewhat paused a little, right, when the market formed this range over here. So this is somewhat of a potential accumulation stage. And what I really like is that this market is actually hugging at this area of resistance, forming a build up. This to me is a sign of strength, because if the downtrend is strong, if this area of resistance is strong, right, the market, right, should quickly move away from this area of resistance. But it did, right? So this to me is a sign of strength. It's telling me that buyers are willing to buy at this higher prices. So basically, my entry trigger came when the market break out of this area of resistance. Right, I went long, had my stops right below this low somewhere here, right, and it did went in my favor this coming week. So again, right, had a bit of open profits on this trade to kind of again cover up the losses that I had earlier. And lastly, another dollar yen trade that I took. All right, it's another breakout trade. Right, so this one is again relatively straightforward. All right, basically the market broke out higher, had a somewhat of a bullish flag pattern that is formed. Right, I spoke about bullish flag pattern, I think just this week itself, with a blog post on it. If you have not seen it, right, you can go down to my website tradingwithrayner.com, right, and check it out. Right, so basically this is a bullish flag. I went long again, in anticipation of higher prices, and pretty much, right, this wasn't the easiest trade to hold because it pretty much went against me after a while, right? It hadn't hit my stop loss, right? So again, since it hadn't hit my stop loss, right, there's no reason for me to bail out the trade, right? So eventually it did slowly grind back in my favor, and again had open profits on this trade as well. So I guess the point that I'm trying to share with you is that yes, I do have losing trades as well, and yes, I do have open trades which are in the green. So as I'm cutting my losses, as I'm trying to ride my winners, right, this numbers, right, it tend to cover up one another, right? The losses are being covered by the winners, and the winners at the same time, right, may have to pay for some losses along the way. And in the grand scheme of things, right, over the next 100, 500, 1,000 trades, right, the losses are maximum of 1 hour, minus 1 hour. That's the max, right, I would take excluding slippage, right? So most of the time, right, the biggest loss I have is negative 1 hour, the maximum. But if the trade does move in my favor, right, if it does trend really well, hey, I could get 10R on the winner, 15R, or even as you've seen my earlier videos on crude oil, euro dollar, dollar yen, right, 40, 50R, that is possible as well. But those type of trades, right, they don't come often, okay? But the thing to know is that, the maximum loss that I could incur is usually just 1 hour, the max. And if the trade moves in my favor, I could get 10R, 15R, 20R or more on my winners, and that will pretty much compensate for all the little losses that I incur along the way. And in fact, I don't usually get 1R as my maximum loss because I trail my stop loss, right? So sometimes I do have losses of 0.5, 0.6R. That's usually the norm, right, between 0.5R and 0.7R. So you can see that that's pretty much the name of the game, right? Letting the numbers work for you. And yeah, that's pretty much what I've been through this week, and I just want to share with you. So maybe to end off this video, right, I just want to share with you a potential trading setup I'm looking at this week, right? I think Pound New Zealand is worth keeping a lookout, right? Notice that this market came into this area of support, right, and formed quite a nice tight build up over here, right? Market is in a very tight consolidation. So to me, right, if the market doesn't move up higher, right, then chances are it would retest this area of support and could possibly break down. So what I'm looking for is for the market to retest back this area of support, right, consolidate for a few more days and then it break down. And if that happens, right, I'll be looking to short the Pound New Zealand, right, and having my stops, right, somewhere here. Okay, so this is a Pound New Zealand trade, definitely worth keeping a lookout. And let's just add one more, right, just to give more value, right? I think Euro Yen, another market that is worth looking. So this one over here, right, pretty much you can see that this market, right, it came into this area of a support, now become resistance, right? On Thursday, you have a very strong sell-off, and Friday you have just a slightly bullish close higher. So looking at the 4-hour price action, you can see that this market pretty much, right, is somewhat in this range over here. And look at this bounce over here on Friday, very weak, right? Small bodied candle. So if you ask me, right, if the buyers, the sellers come back into the market in control, right, I would expect this level to break, right? So if you can break and close below this swing low, that would be a valid opportunity to go short in anticipation of lower prices. And if you look at the higher time frame picture, right, generally this market is in a downtrend, right? You have a series of lower highs and lower lows. Okay, so there's a couple of trading setups to share with you, right? So yeah, that's all I have for you in this week's market analysis, right? And as I was saying, right, you can go down to my website, tradingwithrayner.com over here, just /category/blog, or you just go up over here, click the link blog over here. And this is the flag pattern trading strategy guide that I was mentioning, right? I will share with you in step-by-step details on how to trade it, right? For example, you can trade the first pullback, a trend continuation, the breakout, how to set your entry stops and exits, right? Very detailed, right? This is a very powerful pattern, right, that pretty much happen regularly, and I want to share with you on how to trade it. In fact, in the earlier video I just mentioned, I was actually, trading this particular pattern on dollar yen. So you can see that, very detailed. You want a video, I even provide, okay, this is not really a video, but this is more of a setting a stop loss, right? Video over here, right? You can see flag pattern trading strategy, right? So go ahead, check it out, right? And yeah, I hope this, pretty much helps you in your trading, right? And for those of you who want more, right, go and download this Ultimate Guide to Price Action Trading, right? Again, right, it's a very useful ebook, right, about 50 pages, right, sharing with you, practical trading tips and techniques, right, on how to trade price action in the markets, right? Just enter your email here, I'll send it to your inbox for free. Okay, so with that said, I've come to the end of this week's market analysis, right? If there's anything, just let me know in the comment section below. And if you want to, stay updated, right, hit the subscribe button, right, so you always know when I, publish a new video. Okay, so with that said, right, I'll talk to you soon.